The Nasdaq just lost $1.8 trillion in market cap in 2 days after the tariffs announcement, but Silicon Valley home prices are still up 2.6% year over year. What's really happening? Silicon Valley homeowners and buyers are caught between record home values and economic uncertainty. In this video, I'm going to be providing a data-driven analysis of how tariffs are actually impacting different segments of our local housing market. The decisions you make in the next 90 days could cost you or save you hundreds of thousands of dollars. Hey, I'm Spencer Su with eXp Realty, and for over 7 years, we've helped Silicon Valley homeowners and buyers navigate market shifts just like this one. Whether you're a tech employee worried about your stock-based compensation, a homeowner considering selling at peak values, or maybe you're a buyer wondering if now is finally your opportunity, this video has the actual data and strategies you need. Despite what you might be hearing about market crashes, Silicon Valley home prices hit all-time highs in April of 2025. Here are the county breakdown. Santa Clara County median sales price, $2.151 million for single-family homes, up 12.6% year over year. Single-family home inventory is up 77% year over year, with 779 homes for sale as of April 5, 2025, but only 30 days of inventory, indicating still a seller's market. Single-family homes are still selling very quickly with an average of 13 days, while condos are taking more than 21 days. The current mortgage rates are averaging about 6.62% for a 30-year fixed loan, with jumbo loans are typically lower in the low sixes today. But with tariffs throwing tech stocks values into turmoil, is this market strength about to reverse? Let's look at what's really going on. April 2nd's Liberation Day tariffs didn't just shock Wall Street, they fundamentally changed the equation for Silicon Valley home buyers who depend on stock-based compensation. Here is the tariff timeline. A 10% baseline tariff on all imports with country-specific tariffs. A 90-day pause was announced for all countries except China, whose tariffs have so far increased to 125% as of April 10th. Because of this, tech stock companies have plummeted. As of April 24, 2025, here are some key examples. Here's Apple at $208 per share, Nvidia $106 per share, Meta $533 per share. This has created a lot of volatility where tech stocks experience significant drops following these tariff announcements, but have shown a little bit of signs of recovery. In the Bay Area, buyers are typically dependent on stock-based compensation, with 73% of Silicon Valley home buyers in the $2 million plus range relying on them. Unfortunately for tech companies, they are natural targets for retaliation, but this impact goes deeper than just stock prices. Let's examine how tariffs are directly affecting construction costs in our local market. The average cost to build a new home in Silicon Valley just increased by $9,200 overnight. Here's exactly where that money goes. Lumber increased by 34%, structural steel increased by 22%, aluminum roofing materials 18%. With all of these different things going on, new housing starts in Santa Clara County are down 15% from 2024 levels. ADU construction costs have always been for more than $500 to $600 per square foot in Cupertino and Mountain View areas throughout Silicon Valley. The builder confidence levels has dropped from 66 to 46 out of 100 in the 6-month outlook. But these impacts aren't uniform across all of Silicon Valley communities. Let's break down which areas are most vulnerable and which remain actually pretty resilient. While Palo Alto and Los Altos remains largely insulated, other parts of Silicon Valley are showing early warning signs of market shifts. Premium markets like Los Altos, Palo Alto, Saratoga. Take a look at this. Median prices have grown to $4.5 million, up 15% year over year. You look at the mid-tier markets like Sunnyvale, Mountain View, Santa Clara. Median price grew to $1.847 million, up 4% year over year. If you look at the entry-level markets here, San Jose, Milpitas, Morgan Hill, median price grew only by 1.6% to $1.435 million. So what does this all mean for your buying or selling decisions? Let's look at the specific strategies working in today's market. For the first time in 2.5 years, Silicon Valley buyers do have leverage again. For many of the buyers that are looking to get out of renting and into their first place, there is way less competition. There is little to no appraisal risk. Individuals are able to put less money down and not have to be concerned about going against others that are putting a significant amount of money down that can beat you. For those that are looking to trade up, this has been an advantage for you guys too. Because think about it, if prices are not rising as fast, even though you're selling from a cheaper home to a more expensive home, this is a big benefit for those that are looking to do a trade up. Never mind, some of you guys may be thinking about doing contingent on selling offers. Now, this is not a win for everybody though. People that are selling homes may be factoring a little bit more issues, right? They may not be able to get the record high numbers that they saw their neighbors hit. They may have to sit on the market for longer. They may actually have to do price reductions. Many of them mentally may have to decide to take their home off the market and just rent or just wait for a different time instead. Who knows what will happen. So the question for everybody that owns a place or that's making a decision is, should you buy, sell, or wait? Here is your consensus on Silicon Valley's housing trajectory for the next 12 months. The material cost impact increases are being passed to buyers buyers that he thinks that's sustaining price levels. Oscar Way with the California Associated of Realtors. Supply chain disruption are likely to cause a market slowdown, so we may have a reduction in terms of the volume of transactions. So their consensus is that we're probably going to see a little bit of short-term price stability, construction is going to be slowing down, and increased volatility, which is not unexpected. Based on all this data, here's what you need to do and think about next. Silicon Valley real estate remains resilient despite these tariff pressures. However, different market segments are responding differently, so you cannot have a blanket approach. So if you're buying a single family, still be prepared for a lot of competition for these homes. But if you're buying condos and townhomes, there is weakness and there is many opportunities to be able to buy homes at a discount, or in those entry-level areas a little bit further out. A lot of those people that are entry-level buyers have been spooked. Now, if you made it to this far in the video, it's likely that you're thinking of buying or selling Silicon Valley or figuring out which city makes the most sense for your family and your budget. Reach out to me directly at spencersuere@gmail.com. The difference between choosing the right city versus the wrong one can mean hundreds of thousands of dollars in your future equity position. But before you go, if you're curious where the best and worst places to live are in Silicon Valley, then you need to watch this video next. I ranked the top Silicon Valley cities and the ones you might want to reconsider. So if you want to make the right decision or just find out which areas are near the top, click up here to find out now.